Bitcoin, the world's most popular cryptocurrency, has always been at the center of financial speculation. Every surge, dip, and correction sparks debates about its next potential price target. As we enter the fall of 2025, investors, traders, and analysts are once again asking the same question: what's the new target for Bitcoin? Bitcoin sets a new record. On August 14th, 2025, Bitcoin shattered expectations by climbing above $124,000, riding a wave of optimism around interest rate cut signals and regulatory ease. What helped ignite this surge? The Federal Reserve's dovish hints on upcoming rate cuts pushed risk appetite higher. New U.S. regulations are welcoming crypto into retirement plans, unlocking a potentially transformative influx of capital. Institutional players continue to ramp up adoption, reinforcing Bitcoin's legitimacy beyond retail speculation. What's driving the rally? Four critical trends are forging BTC's ascent. Monetary easing expectations, investors are pricing in fresh rate cuts, boosting appetite for risk assets like Bitcoin. Crypto-friendly policies, especially an executive order allowing Bitcoin in 401k accounts, have opened up investment channels for institutional capital. ETF inflows are surging, with funds like BlackRock's IBIT leading the charge, acting as a magnet for new money into the market. Institutional stability. Bitcoin is seeing steadier demand from long-term institutional investors, which is smoothing out its traditionally volatile price swings. Analyst forecasts, eyes on $150,000 and beyond. Here's what experts are saying, ranked by time frame. Short term, now to late August. Analysts are watching the $125,000 resistance level closely. A sustained break above this could lift Bitcoin toward $150,000. Some traders are already eyeing a move toward $126,000 to $130,000 as this momentum plays out. Midterm, next few months. Many firms now forecast Bitcoin could settle or rally toward $150,000, leaning on continued ETF demand and easing economic pressures. A few are more ambitious, projecting targets in the $150,000 to $200,000 range by year's end if macro tailwinds stay supportive. Bullish outliers. Market veterans and ultra-optimistic forecasts suggest that, given institutional momentum, Bitcoin could eventually redefine itself, with year-end prices reaching $200,000 and more speculative views pushing even higher down the road. Why this might be more than a flash in the pan. Several structural shifts are bolstering confidence. ETF dominance. Spot Bitcoin ETFs are now commanding significant market share, drawing liquidity at levels that dwarf current mining rates. Institutional asset accumulation. Corporations, endowments, and pension funds are increasingly holding Bitcoin as a strategic hedge, not just trading it. Growing capital inflows. Analysts forecast potentially hundreds of billions of dollars might wind up in Bitcoin from institutional channels by year end. Market maturity. As infrastructure and access improve, Bitcoin is shedding its digital Wild West image and gaining credibility as a financial asset.